I think we're live. Awesome.
Yeah, let's kick it off, Grace.
Nice. Thank you everyone for joining. And if you've hopped in right now, it's a really good start of our second episode of Enflux Insights. Mainly in our insights, we talk a lot about the market narratives as well as what's happening in the market news. And it's a great opportunity for anyone who's even a builder, or if you're a retail trader as well, if you wanted to understand how founders actually react and understand in the markets, like in the market movements and stuff. You are able to learn a lot from the sessions, and every episode packs different voices, and we're trying to bring as many important voices as possible. Today we've got Yele, of course, our co-founder from Enflux, as well as Daniel from Simplicity Group, who will share their perspectives of the market. And hope you guys enjoy. We'll pass it on to you, Yele, to kick this off.
Thank you, Grace, and thanks for being here, Daniel. Maybe let's kick it off with a little bit of an introduction from your side, and then I got a couple topics to discuss, and I think the first one will be what happened over the weekend, but I'll first give it to you.
Yeah, hello everyone. So first of all, thank you for having me on, Yele. I'm Daniel, director of Simplicity Group. Just a little bit of background on myself. Studied economics at university, did a master's as well, and was always sort of trading crypto and investing. And after having an internship in the traditional world, realized it wasn't for me. Got into crypto at first thinking it could change the system and revolutionize the system. Now I realize it's a bit more of just a evolution of the traditional system. And with that, founded after working at a VC and incubator, realized there was a problem when it came to tokens. Tokens were completely misunderstood. They were used as like a fundraising vehicle and marketing tool only. People didn't actually think about the economic systems behind them. So myself and my co-founder Alex started Simplicity Group just under 4 years ago now. And from there, we've worked with about 150 projects. We've also opened up other business arms, such as doing research and due diligence for VCs. We have a marketing arm and also an advisory arm. Yeah.
Pretty good. I would love to go a little bit more on like the purpose of the tokens, etc. That you say, rather than fundraising and marketing. But first, let's go into what happened over the weekend. I mean, I think a lot of alts went down. I think a major one, Athena, went down as well. What's your thought around what happened and the insights that you have as kind of like a B2B guy in the industry rather than like a retail trader?
Yeah, so the first thing I think is there was clearly a meta going on of perpetual DEX trading. Whether you're looking at Asta, Hyperliquid, it seemed to be all anyone was talking about. And I think that's where a lot of retail went, or a lot of money went into the market. In previous cycles, we had like different stages. We had altcoin market cycles. You had like more high caps getting a lot of volume, mid caps, low caps. And this cycle, there was a meme phase, which kind of happened earlier this year and last year. And then it seemed to all transition to futures trading and perpetuals. And I think ultimately now in the market, we have to understand that the days of easy money are over, and there are bigger players who basically control the market, whether that is traditional crypto companies or whether that is more of the institutional side. They know how to play the game. They've been involved for much longer, and they're always going to beat retail, and they're always going to make money from retail. And I think what happened is the futures market got oversaturated. There was an opportunity for these players to make money, and they took it, in essence.
So do you feel like there's been no kind of like catalyst or general like market correction that was needed, and it was purely a play from like the whales and the smart money to push price down to get the guys liquidated?
I mean, if it was a market correction, I think we wouldn't have seen as strong of a bounce back. I think a lot of, Bitcoin, ETH have been climbing since then. I haven't looked at the charts today or yesterday,
True.
But like they've recovered very strongly. You look at what happened with Binance and with other exchanges, your average trader wasn't able to purchase any assets. And then you see that BlackRock, it's not confirmed yet, but apparently they bought a bunch of Bitcoin during the market lows. I'm not necessarily saying they orchestrated it because I don't want to accuse anyone, but I do think they at least had plans in place for this, and they're not complaining by the market dump. And it definitely is a correction. I think there was too much money flowing in futures. People, of course, are saying that it's the biggest sort of liquidation event in crypto, bigger than FTX, bigger than COVID. But having said that, when you look at the actual percentage of the market, this is only the third biggest, I believe, when you look at the percentage of the market versus the liquidations. So it's partially a correction because people are just throwing money into futures nilly-willy, but I do think there's more at play than meets the eye.
Yeah, I mean, this event made me think about, like, I think more like 2022 when prices started to go down. Like a 30% drop was, I wouldn't say like it's unusual, but it happened a little bit more back in the days rather than now. And I think the last time we've seen a 30% drop from a specific level was maybe March when the price was going down. It's been quite a long time since we've had a correction, so we might be overdue as well at the same time.
Yeah, I
The
think.
interesting thing, yeah, go ahead.
No, I was just going to say, if I'm not saying it wasn't a correction, but I think corrections typically they don't happen. They're not like flash dumps to the same level. Like you might see
No.
a big cascade, but it's normally like progresses over time. This I wasn't awake when the crash happened, just because I'm in APAC, but it seems to have been more of like a instant out of nowhere cascade. There was no real time to prepare. I know I remember when when it was Elon Musk said that Tesla's not going to accept Bitcoin anymore. There was that initial crash, but then there was like a period of time, maybe a day or two, where the market continued to dump. It wasn't like a V shape. It was more of like a U shape. So that's like, yeah, my perspective on it.
Yeah, the two other things that were interesting is Ethena went down at the same time as well, and I think this is what someone said is like, I think EUSD can now be held as collateral for perpetuals trading, and if that one depegs as well, your collateral devaluates, and that triggers a lot more liquidation at the time. I think it went down to like say 20% or something. Do you know anything about like what happened with Ethena EUSD on that one?
I haven't looked too much into it, but it's definitely interesting. I think the funny thing about Athena is it is like more of a business than other crypto projects. There is revenue being made. Athena seems to have a stable mechanism, but the fact that Athena dipped so much, when really and truly none of the fundamentals of Athena changed, the business didn't suddenly produce bad earnings. If you're looking at like a Web2 world, it does show you that there's still a lot of, how would I put it, the crypto market and the traditional markets, whilst they do follow each other in some sense, are still very separated in actual like market price action.
Yeah. Well, the thing that never, so for, and it's the same with USDT, USD depacking in any way, right? Like as long as there's still over collateralization of the stable coin, there shouldn't be an issue. If you can still redeem one-to-one to the actual asset, there shouldn't be a depegging needed, because that means there's a lot of ARB. And I don't think within their system, if you, for staking and unstaking Athena, I don't think there was any problem there, but it was a problem on the exchange where price went down a lot. It's not a good thing. The other interesting thing, I don't know, I posted about this the other, like I think a day ago, about Hyperliquid and the Hyperliquid vault where people can provide liquidity for the whole platform. It's interesting how the P&L of that one shot up like crazy during the time of all these liquidations and the amount of volatility. And the cool thing is that like normally market makers profit insanely from these highly volatile things, but retail can do it as well by providing liquidity on Hyperliquid. And I think there were just so many liquidations happening that vault was just, generating so much profit that was, off the back of all the retail being over leveraged. Have you checked the vault? Or you invested in the Hyperliquid vault? Or
I haven't invested personally, but I did see your post and it did get me like interested in investing. I think ultimately the exchange or the the exchange basically always wins in trading. Like you look at how many people get liquidated. I know there was a massive cascade, but even on like a normal basis, it's like more than 90% of traders lose. And what Hyperliquid has done is it's basically democratized the opportunity for people to, in essence, be the liquidity or the LP for the exchange. And I do think it's interesting that those returns were shared with the community and that the APY did spike. I am curious about how much of an impact that would actually have across, let's say, an annual period in terms of, I know the APY spiked, but let's say it spiked for one day only. How much more profit will people who had money in the vault actually get from that spike over the period of a year? Is it actually going to be negligible, or is there going to be like a significant increase in the amount of money made by people providing liquidity?
I don't know. I know that the APY, at least from last month, was around like 7%, and right now it's spiked up to over 100%. So it is not like I think the stable APY is around 7-8%, while this spike, made it up. So I think the average will probably come down to like, what is it? Like 12% this year if these things happen. Well, if it happens more, like that's good profit for the people that invested, right?
Yeah. Out of curiosity, has the APY dropped down yet? Do you know, or is it still sort of at the 160% range?
To be fair, I don't know how the APY, they don't have like a dynamic APY where you can select a specific period or see like, the past 7 days, past 3 days or something. It's just, I think, a specific period. The UI of that is not that great.
Okay.
But I think it dropped down, yeah. I think most of the money there is being made out of like liquidations and the slippage happens on those, plus the general liquidity provisioning. If volumes spike as well, I haven't checked the volumes on Hyperliquid. There's still a lot of money to be made, but otherwise it goes down.
Yeah, I am curious to see how much volume there will be in the futures market now as well, with so many people being liquidated. Was it mostly retail? Is it more institutional? Do people still have money to actually trade?
I think it was 20% of the open interest was gone after this event. I've yet to see it go back. I use Coinalyze. I don't know if you know that tool to check on the open interest aggregated by all the platforms. I think it went down to from like 130 billion to around like 90 or something, or 120 to 90, something like that. But it was crazy. But you can also see the open interest rising over time, mostly by Bitcoin, to be fair, and people getting leverage there. But yeah, that was quite a significant drop. The other thing I was curious about is the thing that everyone was talking about, like especially in Singapore as well, is the alt season and the general cycle. I think it's an often discussed topic. I'm curious what you see. I mean, a lot of things that came up was institutions, altcoins. We have AI right now, stable coins, and DEXs, Hyperliquid and Aster right now. What's your thought on this cycle and kind of what we can expect, especially after what happened over the weekend? Is the alt season idea still in play, or would you discredit that in general?
I would discredit the idea of a full-scale alt season. I think we're not going to ever see 2021 or 2017 again, because money was just too easy to make. You would buy a micro cap or a coin that was listing and you were pretty much guaranteed to make money. It was the same thing from the VC side. You would invest in any project. If they had even a KuCoin listing, you were pretty much guaranteed loads of X's. I remember last cycle, there were some coins like Star Atlas did a 5,000X from TGE, I think, which was ridiculous. I haven't seen anything over really a 20 or 30 this cycle. When it comes to the DEXA side, I think what we're seeing is where crypto should be heading. It's businesses that have a token attached to them, and these businesses are generating real world money and revenue. And that's what's actually driving the demand for them. I don't know, Aster, if they are actually doing a lot of buybacks, but I know Hyperliquid does frequent buybacks. And I think, again, that drives value into the token. And that's where the speculation comes from, if there is any speculation left, or if people do think it's fundamentals. We look at Web3 projects, they're still extremely overvalued compared to the Web2 world. It's more in the ilk of a Tesla versus an Apple. And one thing I will say is with institutions getting involved, I do, again, see certain niches having like runs, but not across the board. I think Ethereum, whilst a lot of people clowned it, including myself, when it was a stablecoin in essence, ultimately, having spoken to a lot of these institutional players and like some companies with like specifically that have like more than $10 billion in AUM, they pretty much said, other than Bitcoin, the only thing they're interested in is Ethereum, because it's what has withstood the test of time the longest. And whilst people say like when Ethereum gets busy, your gas fees might go up to $50. If an institution is doing transactions in the size of like 1 to 5 million or even more, they ultimately don't care about the gas fees. $50 for them is not even a scratch into the total size of the transaction. I think Solana seems to be a lot more retail driven from the memes. I don't really see too much activity in Solana in terms of like, again, serious businesses coming in or like RWAs. So I think Ethereum will have its time to run, and more so Base as well. Like when I speak to institutional players about getting involved in crypto, when I mention Base, they're all excited. They all want to get involved. They want to speak to Base ultimately. But when you mention Solana, there is zero interest. So I think what we'll see is like projects that have real revenue will have their time and cycles. And then also I do think Ethereum projects will have a little bit of a run, and more so Base as more institutions get involved.
Yeah, I mean, institutions getting involved in Bitcoin makes sense, right? Like, if let's say it's a store of value or something, or like that makes sense. But as Ethereum and any other altcoin is designed to be used, like what is really the value of institutions getting into like Ethereum, for example? I sometimes compare it to, let's see if AWS credits are on the blockchain, so it's kind of like a token, right? Back in the days, if AWS is only being used by 1,000 people, or let's say there's not too much adoption yet, but every institution starts to buy. There's so many people that hold AWS tokens, but no one is using it yet. And I feel like that's a little bit what is happening at the moment, even on Ethereum, where there's 15 billion of daily volume on Ethereum, but there's only $1 million in gas fees being paid, which means that the real utility volume is significantly lower and is less than 1%, less than 10 basis points. Like, why do you think it's still important that institutions get into assets like Ethereum or Solana?
Solana, not so much again. I think Ethereum is ultimately the main value prop of blockchain and crypto for institutions. I think is the fact that you can that there are smart contracts. It allows them to automate far more than an AI agent would. You look at Biddle or Build, however you want to pronounce it, from BlackRock, and it's all about smart contract utilization, automating transactions. And yes, they've made their own sort of system for it. But I think when it comes to RWAs, assets on chain, I do think we are moving more to that world. And I don't think this is what people expected a year ago in terms of like you'd have loads of utility coins attached to these RWAs. I think it just means more assets are moving on chain. And ultimately, when you look at how are these assets secured, you do need to have a chain that will secure them. And I think, again, Ethereum is the one that's withstood the test of time for these parties and these institutions. And the other thing is with the ETFs now, I believe, I didn't fact check this, but I did see some tweets and like stuff on LinkedIn that ETFs are now allowed to stake their Ethereum for yield. And for institutions, it's all about making money. And it's just the playbook of they can get these Ethereum ETFs, they can drive demand into them, they can stake that Ethereum and get even more yield for themselves and for the people who actually are purchasing these ETFs on their behalf.
Yeah. Do you think then that everyone is making a bet on future like utility, or like that the chain will be significantly more used and they want to buy the asset before it gets really, really expensive? Or do you think it's just still a speculative play for these institutions?
I think it's a mix of both. I think there's definitely a speculative nature. They've seen how well Bitcoin has performed since the ETFs were announced, since they've started heavily getting involved, and they want to repeat the playbook. But I do also think it is the idea, and I don't necessarily think it's going to be usage, because let's say you do put property on chain or gold on chain or whatever it may be. I don't think we're going to see ridiculous trading volume. I don't think it's going to be a situation which increases the amount of gas fees being made. I think more so it's just a easier system to use, especially with smart contracts for these institutions. But what I do think is that they want to ensure that the chain is of a significant size to secure those assets. If there's $5 trillion worth of assets on chain on Ethereum, but the market cap of Ethereum is 100 billion, it doesn't make sense to have these assets on Ethereum, because you need to ensure that the chain is secure, but there are no attacks. Who knows, you might get North Korea might magic up 100 billion and somehow mess with Ethereum again. I'm not saying I'm not like a dev, I don't know exactly how that's possible, but just the general notion that the chain needs to be worth more than the assets on it, I think, is how these institutions view it.
Yeah. One other thing is the whole DEX war, so to say, with Hyperliquid, Aster, and stuff. We had DYDX before. Why do you think Hyperliquid won from DYDX and kind of came up so quickly?
I think ultimately it was taking care of its community. Well, first of all, there was no VC sell pressure, I believe. I think they were self-funded. Two, it was the fact that they actually took care of their community, and it wasn't farmers who received the airdrop. It was people who were actually using the platform. I think a lot of people had no idea how big the Hyperliquid airdrop would be, and ultimately it built a cult that follows it. And that's not a bad thing. I think you look at traditional brands as well. You look at Nike, you look at high-end fashion. All of these brands do have cults, and it's what drives the demand for these brands. And I think there's negative connotations to the word, but ultimately, if you are a brand or a business, you want to have a cult following you. And what most Web3 projects get wrong is they don't build a cult, they just reward everyone. and they think that's going to bring in users. Whereas Hyperliquid, I don't know how long it was active for before the token launch, but it was like at least a year, I believe, if not two. It was building its user base. It had like a trusted community who were using the product for the product. I think at the time of the airdrop, there were less users on Hyperliquid than DYDX, or at least the peak of DYDX. And what happened is, again, they built that cult. Everyone who got a big airdrop started spreading the word of Hyperliquid, started getting other people to trade on Hyperliquid. And also, I don't really believe in decentralization existing as much as I like the idea of decentralization. But again, the idea of like you're trading not on a centralized exchange, you actually are in control of your assets. I think that does play a role in terms of stealing market share from more traditional centralized exchanges.
Yeah, I think so too. I think it's also the ease of use, right? Like without the whole KYC stuff, you can just connect your wallet and that's it. But I also think it's more like an optics because like I bet 99.9% trust that it's fully decentralized, while they don't know what's actually happening in the background and they don't do any background checks to see if it's really decentralized or not.
Yeah, I mean, even if you just look at what happened, I forgot which project it was. We wrote an article on this, so that is pretty bad for me. But there was a situation where Hyperliquid basically deactivated a bunch of trades and rejigged the price of an asset. I think it was called like peanut or jelly or something. And it completely proved that Hyperliquid was centralized in essence, really.
Yeah, and I think they lost capital in that trade as well. That's also where you see when you look at the Hyperliquid vault. There's I think a $4 million P&L drop, which was earned back later, but I think it was in that period where they had to stop any activity from traders to get burned themselves.
Yeah,
that's crazy.
So perception is reality in most cases, not just in business. People will perceive things how they want to, and if you can shape the perception of your business or in life of yourself, it will go a long way, and that's what Hyperliquid has done very well.
Yeah, you were also in Singapore. How do you feel about the vibe there and the stance of the people, and anything you felt like was different compared to like the year before, for example?
So I use this analogy on LinkedIn, but I think it's a good analogy to use. In essence, for me, it feels like crypto is at the end of the gold rush. At the start of the gold rush, anyone and everyone could go to a lake, they'd find a bunch of gold, and loads of people became rich. That was crypto 2014 to 2021. Again, it was ridiculously easy to make money. Hundreds of thousands of millionaires were probably made, and it was very accessible to everyone. Now it's like you actually actively have to like stand in the lake for hours to find that gold nugget, and that gold nugget can vary based on what you're looking for. But I didn't speak to too many projects, far less than last year. And Token 2049 is already a bit more of a like, I don't want to say institutional, but a bit more of like a high level conference where you don't meet project. You do meet projects, but there's less projects than like a Dev Connect or something. But this year I really felt it. Like I would speak to 15, 20 people before I find a project. And that's not a bad thing. I think it's a healthy correction because everyone and anyone was building something that was in ultimate reality just a value extraction play, and we've really seen less of those now. But at the same time, there can be no industry without projects. If there's no projects, market makers, advisors, exchanges, no one makes money. So we do need to ensure that businesses are still building in the space. And I think also, I do think there was a bit of, I don't want to say jet lag, but like Token has been the main conference for a few years now, like one of the main ones at least. And I think people are starting to not get bored of it necessarily, but they want something different. This year, I heard far more complaints about F1 than any other year in Token, Singapore specifically. People were just tired of it. There wasn't as many events for the F1. Maybe that means people have less money. Maybe it just means people are less interested. But it just seems to be like there's a lot of tiredness, I guess, in the industry. People want something different.
Yeah, interesting. You mentioned that there's a need for project and builders and people that can continue to build. Otherwise, everyone will kind of struggle. What do you see as the solution to this? Like, how do we keep people to build? How do we keep VCs, to invest money? And how do we keep ultimately retail interested as well, right? Because down the line, that's where, without retail, we'll all die. Without retail, there's no projects. Without projects, there's no VCs. And we're all struggling, so to say.
a difficult question because I think whoever cracks it will ultimately make a lot of money. There's a
Yeah.
few chains that I think are doing a good job. One, I think we need to go far more grassroots. So I've spent quite a bit of time in Indonesia recently, and I was originally came in for like the Solana Startup Village to be a mentor. And there was actually a lot of great business idea. Let me phrase it like this. About 70% of the projects were the same. They were things I'd seen, whether it just be like some basic AI agent builder or some trading platform, or will capture all the APIs for you. But there was like quite a few gems in there. But these people just don't have the ability to fully build a business. They don't have the ability to fundraise because VCs don't look at these regions. For example, like there was a kid who was building something pretty cool, but he gets a laptop for 1 hour a day from his friend, and that's the only time he has to code. He can't even afford a laptop. So I think one thing is going more grassroots, and I think that's honestly one of the best things Solana has done with the super teams. And I'm by no means a Solana maxi. I think it does a lot of things wrong as well. VCs need to like open their scope and stop just looking at, I think, America or New York, where a lot of the capital is now. Europe, I think you just need to expand your horizon. And I think ecosystems and people in the space in general who do like are sort of advisors, I guess, they need to look at the communities that aren't being explored. I think again, LATAM as well, but I haven't got experience in LATAM. But definitely in APAC, there's a lot of parts of APAC where the technology is actually needed. Like there are clear infrastructure problems, and for it to be adopted, it's going to be much easier for projects and businesses that use the technology to be adopted here. So I think, yeah, I don't know if that answers it. There's probably a few bits I didn't touch on, but that would be my overall thoughts.
Yeah, I think that this is the question we're all kind of struggling with. Is like, what is the thing that keeps it alive, or kind of like keeps it going, or how do we resolve it? And I think it's inevitable. It's at some point go into a bear market. But I think these cycles are very much boom and bust. And how do we get the volatility out of it to keep it more stable, so to say, where there's always a good environment for people to build in, and it can actually slowly go up rather than really go in boom and bust cycles like we've seen before. And maybe that means that we need to wash out a couple projects again, like the shit, and start over. But hopefully from there we can just have like a normal stable line without too much speculation, and just a healthy amount that is sustainable, so to say, for the long run.
Yeah, I think.
This is the way I think.
No.
Yeah, go on.
No, that's okay. You can finish. I'll go after.
No, I think the speculation keeps everything alive, but speculation also makes sure there's volatility in the space. So it's a little bit like you need both, but you want one or the other.
Yeah, I think when it comes down to speculation as well, I think it's a reflection of the wider economy and the state of the world. I think, and this might be me looking a bit too deep into it, but you look at like, for example, even in America, I know it's not the entire world, but it's a great example. Unemployment isn't actually too bad in America, but you look at youth unemployment. Youth unemployment is at the highest it's been in 40, 50 years. It's at 12% now. Or I don't know if the word's youth, but it's like under the age of 25. And I think people are desperate now. Like generally speaking, the global economy is on, I don't want to say a downtrend, but things are getting tougher. People are scared that AI is going to take their jobs. There's going to be nothing there. Like going to university doesn't guarantee you a job anymore. Ultimately, there's less opportunity for the average person, and that's why they turn to meme coins, to gambling. Lottery usage is up in a lot of places. And I think even in traditional markets, you look at things like Tesla, for example, even at something that is fundamentally quite strong, like Palantir. Palantir is fundamentally a great business. It is extremely overvalued because people are guessing. You look at the AI industry and how AI businesses are overvalued, and sort of how they're cheating the system, if you will. I mean, XAI recently is doing I don't remember the exact amount, like they're doing a raise in the billions, but they're doing it into an SPV, and that SPV will basically purchase the graphics cards on their behalf and leash them to XAI. So all of those purchases aren't showing up on the revenue statements. So it looks like they're making far more money than they do. And I think speculation is now just a representation of where the world is and the lack of hope people have for the
Interesting
future.
tag. Yeah. Do you think that's also why prediction markets like Polymarket are taking off as well? I mean, we've seen a big spike in Polymarket's volume. I think about like a year or half year ago in up to 1 billion in a week. Right now we're at like 580 million on a weekly basis that's being gambled both in sport markets, etc. It's probably nothing compared to like the whole gambling industry in terms of sport betting, etc. But also platforms like Limitless, they raised quite a lot on Kaito, taking off as well, volumes increasing. Do you think that is partly paired to where we are in the market and speculation is just everything that matters in crypto?
Let's start off with prediction markets. Yes, I 100% think that's why prediction markets are on the rise, and it's the same for traditional gambling. It's the same for lottery tickets. However you want to look at gambling as a notion in general. Do I think speculation is the only thing that matters in crypto? No, I think speculation matters to a certain degree. You need to account for it as a business or project, but I think the best projects do still have fundamentals. Again, Bitcoin, you might not agree with the fundamentals, but there is fundamental logic behind it. Hyperliquid, one of the best performers, it has fundamental logic behind it, but they do all play on the speculation side, whether intentionally or unintentionally. But I do think all in all, yeah, it's just a matter of where the world is and how people feel, why there's so much speculation across all markets. I do believe that. And I think it is a telling time. Yeah.
What are you guys doing in order to like let's say the scenario plays out where for the time being we'll have slightly lower launches and tokens and projects being there. How are you guys positioning yourself to kind of tackle that and adapt that to that?
So from the perspective of Simplicity Group, it is quite hard because again, we're originally a tokenomics firm. We've expanded to advisory, but I think ultimately in life, especially in crypto, which is a very volatile industry, you need to hedge your bets. So one thing is we've started to do more events. We've noticed that we didn't start doing events to make money, but we noticed there was interest there. So again, we're pursuing that because even if Web3 does collapse, events is a transferable skill into Web2. Then it's just about actually having the right investments. If you are investing, you shouldn't be purely investing into Web3. You should be diversified and should have ideally yield coming in from other places, whether that's property, whether that's dividends, whether that's whatever it may be, whether it's a local laundromat business. It's always good to have revenue coming in from other streams. And then ultimately, as a business, I think one of the biggest problems in crypto is people waste far too much money. You look at some of the parties being thrown during conferences, going back to events, there are people spending hundreds of thousands on a party that really and truly brings no value. People aren't going to these parties to remember your brand. Very rarely they do remember your brand. It is more so a reason for people to get free alcohol and party, especially at these club nights, in my opinion. So I think it's just about being smart, having a treasury for however long you may need, however long you think the bear market will be, maybe 1, maybe 2 years. And then just ensuring you're diversified.
Yeah, I think one thing that changed for me when it comes to Singapore is like I think it's better to have a smaller group of people that you really need to meet rather than host like a big one. And ideally, you host 2 events, right? Like one is really mainstream, try to go viral, grab as much attention as possible. The other one is a little bit more of like a close group where you meet, a handful of people that you really need to meet and speak to at an event. I have a couple trade-offs I want to walk you through, and you got to pick straight away, and then you can nuance it later. So, if you look at Q4, would you say bull or bear market? Just
Bull.
Q4. Bull. Alt season, yes or no? Is it going to come?
No.
AI is the Q4 narrative.
No.
Does DeFi have real product market fit already, or are we not there yet?
Yes.
One is a little bit more outside. Do you think the US dollar will be strengthening or weakening in Q4 or in the next couple months?
I think it will be weakening.
Interesting. That's it. I think I'm very curious about DeFi product market fit, because I feel like if we look at all the cycles that have happened, all the narratives we had with AI, I thought about metaverses the other day again, like what happened there, and we've had so many of them. I think the only real strong product market fit crypto has found is DeFi, and I feel like we're trying out more stuff to really move away from it. But the only thing that we still find out, if we're going to kick back to, no, DeFi is the thing where crypto is product market fit. Like, do you feel like we might be looking at too many other opportunities that blockchain can resolve, while let's just focus on DeFi and that being the only narrative? Or do you feel like, no, we should continue to experiment with new narratives and push those out too?
That is a interesting question. I've never actually thought about it before.
Because if you, sorry to interrupt, like if you look at a business, right, like often if you're a startup, like the thing that you need to do is very quickly start to test out a lot of things and see what sticks, right? Crypto has found that thing that sticks. It's DeFi. And normally you would say that you double down on that. And I think we've definitely doubled down on it. But right now people are experimenting and trying to find more things that we can do with it. It's almost like, hey, we have a working business. Let's diversify a lot more times. Do you think that's the right approach, or should we just accept like DeFi is the narrative and that's what crypto is about and that's it?
So I started off in my introduction saying I thought crypto would revolutionize the financial system. Now I realize it's just an evolution of the financial system. There is no revolution. It's really and truly the same. It's just evolved with processes. And that's where I think DeFi comes in. I think the reason DeFi has the strongest market fit is because ultimately, for a lot of people, crypto is one, about making money, finance, and two, it's about actually being able to store your money. Again, with Bitcoin, the idea is you want to either escape the dollar or it's like the digital gold. Whether you believe that or not, that is the thesis a lot of Bitcoin holders have. So I definitely think that DeFi is the most promising angle for crypto that we've seen. It's attracted the most users. It's the one narrative that I think has remained resilient since 2017, if you will. I know there's been dips still, and there's still that speculative nature. But for example, you look at AI agents right now. I can't think of any protocols that are like AI agent protocols that are still being talked about or still people care about in the space. AI agent run was very recently. However, I do think experimentation is still important. For example, Deepin. I think Deepin is another great use case for crypto, and I think that it's one of the easiest ways to explain crypto to someone who isn't actually involved in the space. With DeFi, a lot of people question whether it's good that we don't have an authoritative figure. You can get hacked, you can get scammed. However, with Deepin, the idea that you don't want one party controlling all of your data, all of the all of your data basically. It does make sense.
I think sometimes where the problem is, does it really solve a problem that people really care about, right? Like as you said before, it's all about the optics of decentralization, and it doesn't matter if it's actually decentralized in the back end. People just want to have a place where they can trade on a DEX, so to say, that has some kind of hype and no KYC. And I think the same might be for data. Like they just want to know things are safe and they just want to use it. Is the problem really that big that they would really move to a decentralized storage system, so to say? And that's sometimes what I'm wondering. I think the same was with NFTs. If you think about NFTs, I think the technology is great. I think NFT tickets, they're still could be product market fit. But I think maybe the reason why it's never taken off because the problem is not big enough in the Web2 world to really move to an NFT system for tickets, so to say. So I think a lot of times we're trying to experiment, and I think it's good. I believe we should continue to do it because we might find another DeFi. But I'm also curious, where does it end? How many more angles can we kind of get to this? Or is it just not the right timing? Maybe in 3-4 years or 5 years, NFTs come up again. Now it actually has product market fit because the market is ready for it.
So I would say NFTs already do have product market fit. It's just not in the way we appreciated them or understood them. You mentioned ticketing. There are actually a lot of festivals that do use NFT technology on the back end and use blockchain on the back end for the ticketing. I know one project which doesn't have a token. It's more of a business, I should say. One business where during not conferences, but during festivals, there's very bad Wi-Fi. And what they've done is basically you get like a card and you top up your card, and all of those payments are done through the blockchain, and you don't really need internet connection to be able to make those. And again, the card is basically attached to an NFT, and it's like your own personal NFT. So then you also have the history of what purchases you've made, what festivals you've been to.
Yeah.
So I do think it is being used on the back end. I also think if you look at something like Steam and gaming, as far as I'm aware, a lot of the technology for example, Counter-Strike, and the tradable assets does utilize blockchain in the back end. Maybe not fully NFTs on the back end, but it does use the technology. And I think the problem is a lot of people misjudge the fact that the technology is great, the technology should be used, but you don't need that speculative layer on top of it. And I think that's actually where the problem is. Everyone's trying to make this speculative layer on top of the technology. Whereas if you just utilize and experiment with the technology, you will find more product market fits. Where the product market fit isn't found is in the assets being investable or speculative, basically.
Yeah. But I think where that's where you guys in future might be as well, right? Is in these type of solutions where there might not be a token needed, but there's definitely a blockchain element where they need advisory on, so to say. That's where blockchain in itself will still have adoption, but not the token and the whole speculation around it.
Yeah, 100%. I think most people or projects that we speak to, we tell them you don't need a token. Definitely not now. If you have no user base, if you don't really have your business figured out, you shouldn't be thinking about a token at all. And even if you do have users and a business figured out and like a business model, you really need to question if you want a token. Most of my calls with projects now are me trying to convince them to scrap their token, funnily enough, because I think it's just going to be negative on the business. And that doesn't mean don't use the technology, as you said. I think the solutions of the technology are marvelous, and I do think that the technology is absolutely brilliant. I just think what's being built on top of it hasn't always been brilliant.
Exactly. I have one more question. You mentioned that the US dollar will be strengthening. You say no, and that made me think about like stable coins. And I know you made a post about stable coins in a bit, and it being, I think 0.2% of the M2 money supply. But if the dollar is weakening, why have we not seen like a euro stable coin really picking up? I feel like there are a couple, but it's not widely accepted by all exchanges, so to say. While if the dollar would be weakening, you would assume that people might want to hold, euro stable coin or use it as collateral in purse markets rather than USDT.
Yeah. So when I look at it, I look at by saying the dollar is going to weaken. I think the purchasing power of the dollar is going to weaken. That doesn't mean it's going to weaken compared to other currencies. I think ultimately every currency is weakening. People have the idea that the dollar is going to die and there's going to be the collapse of the US dollar. I don't agree with that. There's a few reasons I don't agree with that. One is ultimately banks lend money to each other all the time. The repo market is one of the biggest markets in the world. It's about $12 trillion annually. Well, it was $12 trillion last year. And all of these loans, all of these trades are basically backed by the US dollar, because the US dollar is the best choice when it comes to a currency. You look at the euro, Europe is declining on most metrics. You look at something like China and the yen, most countries have shaky relationships with China. You look at gold, like some people say gold will be used again. It's just not efficient to use gold to trade. You're not going to go back to the gold standard where banks are sending each other gold bars. And ultimately, whilst I do think the dollar will weaken, I don't think it's going to weaken compared to other currencies. I just think it's going to weaken overall. I think inflation is going to keep continuing. But the dollar is basically the plumbing of the global financial system. And if the dollar was dying, we would see spikes in the 10-year treasury yield in essence. 10-year treasury yield has remained fairly consistent for the last 3 years. And if you look at like the caveat of US debt, which I do think is a problem ultimately, US debt is definitely a problem. People have been predicting the collapse of the dollar because of US debt for a very long time. Pete Peterson was one of the first people who said the US dollar would die because of debt. He predicted that 40 years ago, and he's dead now. And he was his whole life saying the US dollar is about to die, the US dollar is about to die. And debt will eventually become just too large where it is just a problem and it does die. But we don't know when that is going to be. So the US dollar will still, I think, be the strongest currency. I still think it will be the currency that holds together the financial system. But I do think it is continuing to weaken. And unless Bitcoin sees a absolutely insane surge where every single person buys it on Earth, Bitcoin can't be that like currency which banks use. I don't
Yeah.
think. I think we're 30, 40 years away from that.
Mm-hmm.
And I don't think there's
But
another
what
currency
is
that can really compete.
but what is the reason we're not really seeing a euro-backed stablecoin really taking off and competing with the dollar, so to say? And I think right now it's like by a far margin, right? Like it doesn't even represent the fair competition euro and dollar have right now. The gap between USDT and US Euro C or whatever is out there is massive.
Yeah, so we actually have a stablecoin report that we've completed that we haven't published yet, but we did look into basically US dollar denominated stablecoins versus other stablecoins. And I think out of the top 20 stablecoins, there wasn't a single stablecoin that wasn't dollar denominated. And the difference between the biggest one, USDT, and the 20th place was fairly large. I think 20th had like 600 million in market cap or something. So the fact there wasn't any non-dollar ones penetrating the top 20 really shows that there's no interest. I think there's a few factors. One is the way the market is programmed and the way when you look at centralized exchanges, when you look at DeFi protocols, when you look at, again, I mentioned the dollar is the plumbing of the global financial system. I also believe USDT and USDC are the plumbing of the crypto industry. For people to want to hold a euro stablecoin, they would need to have pairs for all of the coins they want to trade against the euro stablecoin. Who's going to provide the liquidity for that? Who's going to manage those liquidity pools? What exchanges can you actually use a euro stablecoin on? And that is something, again, that I think would need a drastic change. One stablecoin that I do want to sort of give props to is actually a Swiss franc coin called Frankencoin. So Frankencoin is a fairly newer coin. It doesn't have a lot of TVL. It has 30 mil. But I would argue that the Swiss franc is one of the safer currencies. If I was to hedge my bets for the future and just have cash, I would definitely have a large portion in Swiss franc and Singaporean dollar. But this, I think, coins like that might see more traction. But like, does anybody currently believe that Europe is growing or on the way up? I don't think so. I think everyone I speak to about Europe is either leaving Europe or has a negative tone towards Europe. And I don't see a euro stablecoin really being able to infiltrate the market, whether it be because of the way the system is built, because of the lack of pairs, or just a lack of faith in the coin.
Yeah. What do you think the reason is Europe is kind of like declining? Do you feel like a lot of wealth and businesses are leaving Europe in general?
This is a difficult political question. I can speak a lot about this, but ultimately, I think wealth is leaving. I think the quality of life is worsening. I think Europe and the UK have stagnated. I think ultimately, one is the tax system of these countries. I think you look at something like Dubai, which I'm also not really bullish on, but it's attracting a lot of wealth because of lower taxes.
No.
Two, you look at the amount of opportunity. Unemployment, again, is rising very rapidly in these places. People are struggling to find opportunity. You look at the demographic. I think one of the reasons I'm so bullish on Indonesia and is because of the rising population. I think you look at Indonesia now has a population of about 300 million, with the majority of them being on the younger side. I think it can go one of two ways. It can either lead to complete poverty or these people will find opportunity, will improve the country. So I think the population side. I think the not to get into this topic on a LinkedIn and not to be controversial, too controversial, but I do think immigration has damaged a lot of Europe and England. I don't think immigration is bad. I myself migrated with my mum to England, but I think ultimately when migration occurs, it needs to be not to support people, but for these people to actually improve the nation. Not looking at any demographics or anything, but again, a lot of people are migrating to Europe, claiming benefits and not really adding to society. And yeah. I would say those are some
A
of the
lot.
factors.
Yeah, a lot to take in. Yeah, I don't know. I think we're seeing the same thing. I think that's also why we're both currently maybe not in Europe at the moment. But I do see a lot of
Yeah.
wealth leaving. I do think we're in a different economy as well than back in the days. I think when was, let's say, the industrial revolution, like people had like offices and factories in the country itself. I think right now within the digital age, people have businesses that can be run from anywhere else in the world, so they can just easily just move it out. And that's partly I think why countries and especially the high tax uh, locations in Europe are people are leaving from there.
Yeah.
Any topics that you think are still interesting to I think like bring up or really on the tip of your tongue? Otherwise, I think we're closing the end of the hour soon. But anything that's on your mind as well?
A few questions. What narrative do you think is currently underappreciated in this space? What narrative do you think people aren't looking at that they should be?
I don't know. I still think we should go back to the basics, and DeFi is kind of it. I don't know if I particularly have one other narrative. It'll be like, hey, we got to look into it. I like Deepin. I think AI is kind of taking a little bit of attention from that. Prediction marks taking attention from that. I think that is still going to take off. But whether that's going to be, I think there's building behind it. It might take a little bit longer before these things are actually taking off and get the appreciation they need.
Okay. And
What about
then
you?
I would say Deepin, and I actually really, again, I'm not looking at this from a speculative nature. I'm just looking at this from more so a where I like the technology to be used right now. Definitely not investment advice. I also like the idea of DeSci. I do think there's some cool things being built in DeSci. I don't necessarily think they're going to go to 100 million market cap, but I think that is, again, another narrative where the technology being used does make a lot of sense. And I do think the medical industry and science is a very flawed industry. I think there's a lot of issues people don't really know about. And I think blockchain opens the doors for these to do well. And actually, one of my favorite coins, and again, this isn't a promotion or saying invest in it, is Research Coin. One of the original reasons I got into it was because Brian Armstrong, founder of Coinbase, is one of the co-founders of the coin. And also that made me look into it wider. And I just find it to be an interesting use case of the technology, although I don't really see how the coin plays a role in the business, to be fully transparent.
Yeah, and I think that's the other thing, right? Like, are you bullish on coins or are you bullish on like an underlying technology? And that they're fully out of sync, in my opinion, often.
I would agree with that. Okay, one final question, and I like to ask this all the time. What, and feel free to take your time, what is one question you've never been asked that you wish you had been asked? It can be personal, it can be business, it's just in general.
What is a question that I've never been asked that I wish someone asked me?
Yes. And sorry for putting you on the spot. I know it's a tough one. It does always catch people off guard.
I don't know if I particularly want people to ask me, but I think that's always something that is on your mind. Is like, do you like what do you believe in that we're doing in the crypto space? And I think that's something that everyone like don't dare to ask, but like, what do you believe in? And I think as a bear market might be coming at some point, right? Like a lot of people leave the space, and those people who leave at some point means that they might have not fully believed in what was being built here, and some of them come back because maybe it's the right cycle again. But I think that there should be a belief in the underlying technology and what it could be and where it could go, and believe in that. And I think, like I said, DeFi and Bitcoin have a really good product market fit here. And I think there's a lot of other underlying technologies that I fully believe in. The speculation, I think it will always remain to a certain extent, but it's not the sustainable factor unless you look at prediction markets, in my opinion. And Yeah, so I think if someone would ask me like, "What do you believe in?" That's I think my answer, what it should be, and I don't think anyone has ever asked me that question.
Okay. I'll add that to my list of questions to ask people then. And I've just realized
Very,
someone. Oh, sorry.
no, very good question.
Yeah. And I think someone asked if there's any observations regarding Lighter, the perp dex app chain on Ethereum. Do you know much about Lighter?
I don't know, but I think it's good to go to some questions. Let me, Grace, can you send them to me on Slack as well?
Yeah.
You see him? Are
From my side,
you following the LinkedIn, right? Or
yep. I just saw that. And just with regards to Lighter on my side, quickly, I also don't know too much. I know A16 invested in it very early on. I actually know one of the founders, and I knew him when he first got the investment, and I did not expect it to grow to the scale that it did. But he did very well scaling the business. But when it comes to Lighter, I know a lot of people farming it right now. And maybe I just wasn't in the crowd when it came to Hyperliquid, but I didn't know that many people following farming Hyperliquid. People were more using it for the actual product. But people are expecting a massive airdrop. So if they don't give out a massive airdrop, I think they will lose a lot of their market share.
yeah. Do you like? I cannot open the page somehow. What other questions do you see on LinkedIn at the moment?
So that was one, and then there was one more. It wasn't really a question. It was fixed income, on-chain asset management infra automation. That was just a comment.
Interesting. That's an interesting. I don't know if they're referring to this, but you have places like Utila, right? Like these are the systems for managing the blockchain finances on our side and invoice and all that kind of stuff and sending transactions and permissions and on-chain wallet infrastructure. There's not really a decentralized play for this. I don't know if they talk about onset asset management infra automation. And we're also talking about automation of this, where the moment, let's say, an invoice comes in from a specific client and it's being paid, it automatically recognizes that and then puts that into a fixed income or a specific vault where API is being generated. And that way you can automate the whole asset management and your financial background. Rather than you have to do it manually where everything is being logged. Now you can automate where money goes in specific splits. You can push things through and automate that. Okay. Not sure if that's what they meant, but it's very interesting, and I haven't really seen something like that before.
Yeah, no, it's definitely, at least from what you said, interesting and something I'll look into. And I would recommend looking into BlackRock's Biddle or Build or however you want to pronounce it as well, because in essence, that's kind of what BlackRock is doing with its build, but not so much on like a business perspective, more for like high net worths. And again, it's all about using smart contracts to basically automate your finances and asset management. And it is, I would say, having looked into it recently, very, very good use case of the tech where, again, there's no token.
Yeah. Thanks, Daniel. Where can people learn more about you guys and yourself or follow you?
So yeah, they can follow on LinkedIn. I'll try to be as responsive as possible, although LinkedIn does have a lot of bot messages. Also, Twitter, Simplicity Web3, and then Telegram, just at Simplicity Group. We have an alpha channel whereby we post a bunch of alpha research, everything from more institutional stuff to more retail focused stuff. And yeah, I would say those are the main places.
Awesome. Thanks a lot. Thanks for coming on and sharing your wisdom. I think we're 1 minute into the hour. Thanks a lot and have a good evening.
And thank you very much for having me. It was a pleasure.
All good.
Cheers.